All right. Hello and good morning, uh, brothers and sisters, and welcome back to the first session for the day, 17th January. It is 2:30 a.m. Eastern, and we are moving into the UK live. And let's get back to business. Actually, three charts. Unfortunate spike. We once again got out of euro, losing about 22 points on the risk aggressive shorts and about 80 points the conservative trades, but we've issued yet another short call. I'm prepared to lose a 1 to 2% of the equity over here in this region. Remember why 1 to 2%? If you are following a tight risk reward ratio or a risk management, basically you will be taking one maximum around 2% risk per trade. So if we are losing five trades in a row, we are effectively losing 6 to 7% of the capital and giving ourselves enough room or space and time to recover uh, it all together, or maybe in a couple of trades. Actually, two good trades and everything should be recovered. The only problem will occur, if at all, if you are in trouble in trading. The single most factor, as I've been talking time and again, will be the risk management, the over trading. I mean, you're taking too many lots uh, and not looking into the stop loss and the percentage risk that is actually being at stake in every single trade. I'm telling this again and again because I have faced this music in my past. All right. So if at all you're keeping your risk percentage risk loss down to 1% to 2%, then you'll be happy over a period of time. And the best thing is that we'll have to have some time in our pocket, and that time will only come when our risk percentage is less. You cannot afford to risk 5 to 10% per trade, as simple as that. Right, we have discussed this time and again. Let's move forward now. So if we talk about the first four waves since January 2017, this is what we've been analyzing since last 2 days. This is the third consecutive day that we are touching base with the daily chart, and it's now pretty much clear that waves 1, 2, 3, and 4 are all set. It all boils down to the last leg, which began from 1.15. So the situation in the last leg is that at least we have completed three waves. I would like to just present one more scenario. Waves 1, 2. We were talking about 3, 4, and 5. 3, 4, and 5. But now wave 3 is the smallest one out of the 1, 3, and 5. So that cannot be the case. So that should not be the case according to rules. So the only option that I have, or probable option, is to label wave 3 here. Now if that goes correct, if even if that's a wave 3 termination point, there are two consequences. Point number one, we are not yet topped out, and there could be way above highs that we have imagined right now. And point number two is that it is less probable for prices to rally from this point, considering the bearish divergences all across major time frames. That leaves us with one option. High probable trade option is that there should be a wave 4 drop at least towards the vicinity of the 1900 handle. So it drops the wave 4 and then rallies into wave 5. This is the strongest possible wave count which is coming up right now. And You never know if it breaks lower below 1900, takes out 1.17, then I think there's the wave count is something else. But it's always safe to remain on the short side, brothers. All right. So trading point of view, we are again short. 50% capacity from 12, 20, 20 to 40, 50. Remaining around 9, 80, 90, we would want to sell. And we are keeping a very soft target of around the 1900 mark for now in the Euro USD. Right. Okay, moving ahead, for the dollar index. Dollar index, we are still long. That has not taken our stop loss. I mean, this is what is happening. See, dollar index has formed a low, but that did not take our stop loss out. Euro USD formed a high, that spiked us out. That is the only difference. So we've gotten on the short side again in the euro, while we stay put on the long side in the dollar index. Same situation arising for the dollar index as well. Waves 1, 2. I'll have to label or take this into consideration as wave 3. I've not done a wave pip count, but it looks like the fifth wave might be extending. Wave 3 is lesser, the least one, and if that is the case, what we've seen from 94 towards 90 is just a wave 3. There could be a wave 4 rally which could go all the way towards 90 to 70, 80 levels. We'll take a call at that point of time if it's going to drop lower to wave 5 or not. But at this point in time, the highest probability wave count is on the north side. So we are long from 90, 50, stop around 90, at least a soft target towards 90 to 70, and who knows, if it rallies all the way, then 95 is actually on cards. If there is any update on the wave counts, I will be sending out message on the Telegram channel, so keep watch on that. Right now we are 3 trades active: euro short, dollar index long, and the third one gold, which we'll be just reviewing in a while. All right, so again, keep in mind, bullish divergences are very strongly paced for the dollar index. Here it is back to 28 now. It has never dropped below the previous wave 4 termination point at 21, the RSI. You need to keep watch of those things, brothers. All right. And the next chart is gold. We will keep this session, all the live sessions, within the time limit of 10 minutes, and increase individual chart analysis of wave counts very soon. All right. Once again, the daily chart is producing, or just producing, an evening star right now, and this was expected. I mean, last 2 days we were talking about a bearish turn just ahead of the 1357 mark. We'll keep the bear structure intact. If you are there, if you've been there with me, that was wave 3. A, B and C, wave C, sorry, of the triangle structure, and then wave D, again an ABC structure. Wave E, A, B and C is looking complete now, and with an evening star underway, this is only giving us more confidence to stay on the short side. And believe it or not, if this is correct, if this wave count holds to be true, then watch out for prices dropping all the way towards, I mean, it's really unusual to predict price action. I mean, 100 points lower. No, I'm not talking about 100 points, that's just the beginning. The first soft target for gold should be 1236 before any meaningful correction should occur. Right? The only thing we want right now is prices to drop below 1227, completing 5 waves, at least 1227, and then subsequently below the 1310 mark, which confirms the gold is beginning its new trend or new wave on the short side. All right, brothers. So we'll keep this session to a pause now, with euro on the short side, uh, gold on the short side, and the dollar index on the long side. All right. Watch out for individual videos being uploaded with proper wave counts or simple analysis or with the bigger picture. I mean, I love doing euro USD bigger pictures since 2008. Remember, lifetime highs at 1.16, not 2008, sorry, since 2000 levels. uh, so weekly charts and the monthly charts with the bigger picture wave counts shall be presented individually very soon, with starting with euros and gold and dollar index, and we want to talk about Dow Jones as well in the coming days, few indices as well, sorry. Alright, so let's bring this session to a pause. I'll be back again after a few hours during the New York Live at 8 AM Eastern now. Until that time, thank you so much again for being a part of my family and having your time spending online or in the offline mode. Please remember, YouTube channel is going to go for live the same manner it has been doing. We will keep on adding the live sessions and other individual charts as time passes. Alright, if you're not yet subscribed, please press the subscribe button so that we can stay in touch with each other, and the notifications shall be sent out on each video update. Alright, so until the next session, please take care and God bless. Goodbye.